Good morning, fellow option traders. This is Jeff, and welcome to the daily scan for February 4th, 2013. And this is Monday, the first trading day of the week. Well, made it to Florida, more specifically Orlando, and if you want to narrow it down even more, my wife and I are currently in Davenport, which is adjacent to Disney World, which is appropriate. Mickey Mouse. There's the mouse is everywhere around here. But we didn't come here for that. We came here just to enjoy the weather and take a break from the frozen tundra in the north. Okay, so let's take a look at what's going on here. VIX is our key figure. I'd like to see it probably like 15 or so. That's puts a little bit more juice in the market. We're down at 1290, which is we're below again that 13 number. And I suppose after a day like Friday, which was a kind of a big blowout, I don't understand how the employment numbers, unemployment actually went up, and the GDP actually was negative, and all these things are happening, and the market responds contrary to all the indicators because earnings are good, I guess. Well, earnings after a holiday season like Christmas for a lot of retailers anyway usually end up pretty good. But I don't claim to understand the market or to say that it needs to react a certain way to certain news. You just never know. And I'll show you an example of that shortly. But what we are here to do is to look at probabilities and momentum and trends and see if we can take advantage of them. So today we are also going to talk a little bit about how IV affects your credit spreads, and also iron condors, or just how IV affects your options, period. Let's take a look at where we are right now. Mastercard, the earnings play that I had on, was a total failure. We can take a look at what happened here on the charts. Here it is, the sad news. We were looking for earnings to pop us above this 525 number, and it never did. So I'm going to take this alert off of here because I was in the car on Friday, and I was hoping that my cell phone would get a message saying that Mastercard was above this 525.25 where I had the alert. I didn't get a present like that while I was driving, and that's a real shame. But that's the way it happens. You can see that it opened, it gapped up, but there's something that the market didn't like about it and brought it back down. Alright, we can get rid of this too. Sometimes they work, sometimes they don't. Alright, now back to here. And I wanted to talk, I did add to my position on CRM. I mentioned, I think, last week that it looked like as though we could add to this position, so I did. And it happens to be at exactly the same strikes. The reason why it's listed separately here is because they are in separate accounts. However, my account now is fully funded, so we can rock and roll. So I can, make sense of this and keep everything in the same account again. But yes, I did add to it. So Salesforce.com, we're in with 2 credit spreads right now, and they're both doing pretty well. Panera, however, and I wanted to focus in on this one a little bit today, is actually losing just a tad bit of money, And let's go over here and check out why that could be happening. We'll go to the Analyze tab and bring up the risk profile for Panera. And you'll see that we are pretty much right at the break-even point for today, which is right here at 164.45. So if price moves up to 164.45, then we should be even, according to the calculations that the software makes. Now, why is it, and I'll show you here, that I got in this trade on the 9th of January? We should have built up a little bit of profit here with the price at this point in the risk profile, but we aren't. And let me show you why. I think I've talked about this before, and I like to review it every once in a while myself. I click on this little wrench here, and we can adjust the volatility. And I want you to watch, I'm just going to keep clicking this up arrow here, and I want you to watch the white line and the profit and loss for the day. I want you to watch as it starts sinking. So if volatility, let's go up to 5% increase. Now this is not a 5% of the current IV, this is a 5% increase. So if IV is 55, it's going to go up to 59. So this 5% increase in IV, you lose another $10. It doesn't do anything to your red line, which is your profit at expiration, but your current line, where you are today, it does affect that and puts you even more negative than we already are. So click on the reset parameters here. Conversely, if we take away volatility and it decreases, then the white line starts to move up. And if volatility collapses, and let's go up to 5% here too. If volatility absolutely collapses, goes to zero, theoretically, you would be right up here on the red line, because there would be no extrinsic value to the out-of-the-money options. But that just doesn't happen. IV does not go to zero. So what happened here? Let me reset this. All right, we entered this trade on the 9th, January 9th. Okay, now let's take IV right now is at, for this particular strike, is at 54.9, and if we look at the pretty much all the February options here, they're at an average of 50.8. So let's go to Think Back, and we'll go to the 9th, and look what we see for January, or for February, I'm sorry. We see 36. So we're talking about a 20% increase in volatility, which is why when we go back to the risk profile, we're flat, effectively. So that's a little short explanation on how IV affects the price of, or the profit, current daily profit on your credit spreads or iron condors or practically any kind of spread. There are some types of spreads where you want IV to increase, such as calendars, and there are some kinds of spreads where you would rather see IV decrease, such as credit spreads and iron condors. It's just a matter of how you want to play. Now, we don't talk about calendars a whole heck of a lot here, but I do, and sometimes I make separate videos related to calendar trades. A lot of people like to do them for earnings plays, or like I mentioned earlier, later last year, was the insurance policy that I had on the Qs, which I may open up another one pretty soon, depending on if I start to see some IV coming back into the market, if I see the VIX start to move up, then I'm going to be opening up another insurance policy using the Qs. And of course I'll talk about that in the morning, so we'll cover that. All right, now it's time to do the actual daily scan. You know, if you have any questions about this, feel free to ask what I just covered here. All right, we'll go to the A+ list, just simply because I haven't done this in a while. Oh, one other thing I wanted to do before I go to the scan was to take a look at the iron condors that I have open on these positions that I cover every once in a while. I just wanted to quickly show you that things are looking pretty good here. Chipotle, I'm assuming without really looking at this that the same thing happened. They have earnings coming up. Volatility is increasing, so we're just having a little problem here with this profit and loss thing because IV is going up. CF and Priceline have earnings out in the future, but they haven't even confirmed the date of their earnings. Mastercard's is all over and done with. And we saw that, you know, it gapped up and it came back down, and it's trading today in the same range that it was trading before. So we already went through that volatility pop here, and we're back down again. I changed the background color on this just so I know that I'm in the paper money system for paper trades. So all of these are iron condors that we put on. Let's go here, and I'm not sure if they show this here or not. Let's see. CF. All right, when did we put this on? On the 17th of January was when I opened all of these. You get that date off of here. What I wish they would throw in here, another column, is the price at this date and time of the underlying. That would be really nice. So that's when we opened them. And I wanted to show you, if you don't know about this, I just wanted to show you a little bit of a trick here. This risk profile is a little bit hard to read, but you kind of get the picture, as they would say. As if you wanted to look on the chart how the current price relates to your iron condor. You go down here to set slices and you say break even, and you want to go to the break even for the expiration date of your trade, of your option position, and this will move these lines to the break even point. So what you get down here, your price slices are at your break evens, and then all you need to do is just click on the set slices to charts and say you just want to do it on one chart, and then it puts these price levels in here at your break even point. And you can do this, you can also do this on your credit spreads as well, or any other type of spread or option trade that you have open. You can do that even if it's just a long put or a long call. You can do the very same thing. You just have one line. For credit spreads, you'll have one line because you only have one break even. So I wanted to quickly show you that, and that from a position statement, we're doing pretty good here. All right, and just also wanted to point out, and playing around with this Q trade has nothing to do with the the subject of what I'm doing right now, but I did do a bunch of covered calls on this. I think I mentioned this once before too, and they're up $255. If come March, Qs are above $69 on expiration day, I'll get called out, and that'll be the end of this trade. So right now it's up $3,600, but that's the advantage of having $100 to play with, or $100,000 to play with. So that always helps. All right, so I'm done with this, so I'm going to just go ahead and close that so I don't get confused, because I get confused so easily. All right, let's take a look at Apple. We actually have an entry here. You could, looks like we're, momentum is starting to come back in though, so that makes me a little bit nervous. A long-term chart, we are definitely rolled over here on the 50 MA, and we are in a downtrend, but we got earnings coming up. You never know about Apple. Maybe closer to earnings I might want to do a at the money and take a bet on either bearish or bullish. I'll have to read up and see what they think the news might be. You just never know. You just don't know. Chipotle had good earnings, or Mastercard had good earnings, and look what happened to them. So we are, I'm not going to do anything. Back to the chart here, I'm not going to do anything here. I would prefer to have had the %D also come up and touch the 80, but it didn't. We're in the, let's see here, second day actually of %K down and %D down. We're in the first day, so maybe based on that, let me see what happens with MACD and momentum here. If it fails to remain above the 0 line, we may just jump in and see what it's doing today. Go over here. What are we looking at for an open? Maybe up a little bit, so I don't know, we'll see. I'm just not gonna, that's not one that I feel real incredibly comfortable about at this time. Amazon was just kind of like kicking some butt, but apparently not anymore. But we don't have an entry here. We have an entry on the long term. Actually, this is looking pretty good, to tell you the truth. So I am going to put an alert on here. If this would be a long term, we would probably be looking at a March trade on this. They don't have the 6-week weekly cycle for this one yet, so probably be looking at a March, 30 some days out on this. So let's put an alert over here. I want to see it get below this level. I want to just create that alert, and we'll kind of keep an eye on it. Baidu. I threw a simulated trade in here on this one for earnings, I believe. It's at 105. Yes, this is a simulated earnings trade. I am looking for a bearish credit spread on this. So I faked one. I think this was last Thursday. I put a simulated trade in here and locked the price, and we'll see if that one might work out. But with earnings coming up today, after the market, this could be interesting. Maybe that one will work out. Otherwise, nothing. There's nothing out there, folks. All right, now, CF Industries in an uptrend coming down here. Let's put a little circle flag in here, and hopefully we come down here and touch that baby. Nothing on the long term. So we'll watch that one. Chipotle. We are in Chipotle. Or no, we are not in Chipotle. We're in Salesforce. Earnings coming up. I'm staying away from it. Earnings tomorrow after the market closes. Might want to take a bet on that. We'll see how it looks tomorrow morning. I would bet bullish on that one. Salesforce we're in. We already looked at that. Google. Google rocked on their earnings, and now we have a possible secondary entry here. So let's put an alert. And that probably will go off right away. At or above, that looks good. So we may jump in on that one just because this came down here and touched this 55 level here and then turned up. And momentum is heading up anywhere you look. So maybe Google is the new darling to replace Apple. Oh, this recording's going really long. Mastercard, not doing anything right now. I have to figure out where it's going. Netflix. Let's put something in here. We want to watch to see if she comes down here. Priceline. Okay. What might happen here? We would like to have something above the high of Friday. So we want to right click, at or above. That's good. All right, so we'd be looking for a bullish trade there. And last but not least, Panera. We're already in that. We have earnings after the market closes tomorrow. Stay tuned. It could be a wild ride. All right. That's it, everybody. I'm sorry this ran a little bit over, but thanks for watching. Have a great day and happy trading.